Hello and welcome back to the channel. It's time for your weekly financial wrap-up, where we break down the biggest stories moving the markets. Let's dive right in. This week, all eyes were on the Federal Reserve as they released the minutes from their latest policy meeting. The big takeaway: the Fed is holding steady on interest rates for now, but they're leaving the door wide open for future adjustments. They're closely monitoring inflation data, which has been a bit stickier than expected. The market's reaction was mixed, with some investors feeling relieved that no immediate hikes are planned, while others are bracing for potential tightening later in the year if inflation doesn't cool down. Essentially, the Fed is in a wait-and-see mode, and so are we. Shifting gears to the corporate world, it was a huge week for earnings reports. The tech sector, in particular, gave us some major headlines. One of the big names exceeded Wall Street expectations, showcasing incredible growth in its cloud computing and AI divisions. Their stock soared on the news, lifting the entire Nasdaq index with it. On the other hand, a legacy automaker posted disappointing numbers, citing supply chain disruptions and weaker than expected demand for its new electric vehicle line. This just goes to show how dynamic the market is, with innovation and adaptability being key drivers of success. It's a clear signal that the AI revolution isn't just hype, it's translating into real, tangible profits for the companies leading the charge. Now, let's talk about a trend that's been gaining momentum: the global shift in manufacturing. We're seeing more and more companies diversifying their supply chains away from traditional hubs. This week, a major electronics manufacturer announced a multi-billion-dollar investment to build new facilities in Southeast Asia and Mexico. This move is designed to reduce geopolitical risks and bring production closer to key consumer markets. While this is a long-term strategy, it has immediate implications. It is creating new economic opportunities in emerging markets and could eventually lead to more resilient supply chains for everyone. It's a massive logistical puzzle, and watching how it unfolds will be fascinating for the global economy. Over in the commodities market, oil prices have been on a roller coaster ride. Prices initially jumped due to renewed geopolitical tensions in the Middle East, sparking concerns about potential supply disruptions. However, those gains were later pared back after a report showed an unexpected increase in U.S. crude oil inventories. This suggests that demand might be softening slightly, which helped to balance out the supply-side fears. For now, oil is in a delicate balance, and any new development, whether it's a political headline or an economic data point, could send prices swinging. Consumers will want to keep an eye on this, as it directly impacts gas prices at the pump. Finally, let's touch on a story from the world of crypto. After a period of relative calm, volatility is back. The price of Bitcoin saw a sharp drop midweek, triggered by regulatory uncertainty in a key international market. This sent ripples across the entire crypto space, with most major altcoins following suit. The event serves as another reminder of how sensitive the digital asset market is to government oversight and regulation. However, by the end of the week, prices had started to stabilize as bargain hunters stepped in. The crypto narrative continues to be a battle between regulatory headwinds and the long-term belief in decentralized finance. It's a space that's never dull, that's for sure. So, what does all this mean for you, the investor? The key theme this week is uncertainty. The Fed is cautious, corporate earnings are a mixed bag, and geopolitical factors are adding a layer of complexity. In times like these, a diversified portfolio is your best friend. Don't chase the hot stock of the day. Instead, focus on your long-term goals and stay invested in quality companies across different sectors. This isn't the time for panic, but it is a time for prudence and careful planning. The market will always have its ups and downs, but a steady, disciplined approach is what builds wealth over time. That's all the time we have for this week's financial recap. I hope this breakdown helps you make sense of the noise and stay informed. If you found this video helpful, do me a favor and hit that like button, and be sure to subscribe so you don't miss our next update. We'll be back next week to break down all the latest market moving news. Thanks for watching, and have a great week.